April 1, 1994. The Real Estate Capital Scoreboard. April, 1994. Interest rates have increased nearly 1% since the beginning of this year. Nevertheless, the abundant supply of mortgage money drives lenders to offer a variety of competitive terms, including higher loan amounts, more liberal prepayment privileges and streamlined closings. Borrowers often request the maximum loan amount as the most important financing criteria. Loans in excess of 75% of the rate value are offered to borrowers with properties that can demonstrate upside potential via short-term cash flow increases. Additionally, cross-collateralization, credit enhancements and recourse provide other methods of maximizing loan amounts. Although overshadowed by higher interest rates, realty equity markets continue to show signs of improvement, with office properties and hotels recovering. In fact, hotels should prove to be this year's most popular rapidly appreciating asset class. May 1, 1994. The Real Estate Capital Scoreboard. May, 1994. Interest rates continue dropping, decreasing by nearly 0.5%. Markets demonstrate recovering dynamics across all property types. Apartments lead the marketplace with the most favorable capitalization rates starting at 8%, net lease properties at 8.5% and office and lodging properties approaching double-digit figures. June 1, 1994. The Real Estate Capital Scoreboard. June, 1994. Rates moved slightly downwards since last month. However, lenders continually drop spreads in an effort to increase loan production volume. Mortgage funds remain abundant. Equity markets are relatively healthy, despite higher interest rates versus last year. In many cases, owners achieve better pricing via selling rather than refinancing assets. Apartment projects are still the most desirable investments, although retail and net lease transactions closely follow.
July 1, 1997. The Real Estate Capital Scoreboard. July, 1997. Dramatic changes in mortgage conduit pricing have ignited an extremely competitive realty capital environment. Interest rate drops combined with lower spreads create pricing opportunities that are nearly 0.5% lower than only 2 months ago. Short-term interest rates based on fixed-rate pricing start at 7.125% and 10-year funds start at 7.25%. Dramatic changes in mortgage conduit pricing have ignited an extremely competitive realty capital environment.
August 1, 1994. The Real Estate Capital Scoreboard. August, 1994. Rates held steady since July. More lenders are now in the marketplace than any other time this decade. Once again, ample funds are available and lenders are very competitive for fully leased, stabilized properties of all types. A select group of lenders are offering loans as high as 80% for first mortgages. Also, some lenders will fund loans solely based on loan-to-value parameters instead of purchase price or original cost. Such funding programs are highly suitable for acquisitions and below-market opportunistic purchases. Equity markets remain nearly unchanged. Buyers want stable and strong-performing apartment properties, net lease deals, office buildings and hotels. September 1, 1994. The Real Estate Capital Scoreboard - September, 1994. During the past month, rates slightly climbed higher. Competition among lenders is fierce for funding loans before the end of the year. As for equity markets, office building sales are increasing. Most investors agree that the marketplace has bottomed out.
November 1, 1994. The Real Estate Capital Scoreboard - November, 1994. Rates continue climbing as the Federal Reserve aggressively pursues an anti-inflation policy. However, lenders are absorbing rate increases by lowering overall spreads over comparable term government treasuries. For example, many funding sources are quoting 100 to 150 basis points over treasuries for lower loan-to-value permanent debt loan opportunities. In addition to funding Class A projects, due to competitive pressures, private placement debt sources, for example life companies, are increasingly more competitive than Wall Street for a variety of property types including office and hotel properties. Since mortgage rates significantly increased this past quarter, the equity markets also witnessed higher capitalization rates. Investors are less willing to pay premium prices for properties, especially with the expectation of higher interest rates.
December 1, 1994. The Real Estate Capital Scoreboard - December, 1994. Short-term interest rates increased to the point whereby short and long pricing differentials are insignificant. Borrowers are seeking longer-term financing to take advantage of such terms. As mentioned numerous times this year, lenders continue decreasing spreads over comparable term treasuries in order to generate greater volume for the new year. Given the abundant supply of capital and improving economic conditions, virtually all classes of income-producing real estate are financeable today. For example, hotel pricing is as low as 250 basis points over treasuries. As has been the case for quite some time, apartment properties generate the most demand. Vacancies remain low and higher quality properties are difficult to find, with many new projects now proposed. Investors often find pricing levels approaching replacement cost. New construction is now a viable alternative for many types of multifamily opportunities.